think about where you are as far as being on the web analyzer and being a part of the BYOB movement. Now, where's the BYOB cash out strategy? When we go through the web analyzer, we see that there are different tiers. There are different tiers. So tier 1 is no analysis needed, none. You just get the trade ideas. Tier 2 are power trades. So these power trades are different strategies. These take little analysis. These are different strategies that come from different master educators, different educators within IML who actually send out trade ideas, power trades. And they even have one for crypto. Now, volume burst, this is where the BYOB cash out strategy is. If you look, we see the BYOB cash out strategy. There it is. So it's for short scalping and also intraday because, and you can trade anything on here. On the weekends, I trade crypto using this strategy. During the week, I trade Forex. I even trade indices today. So just looking at that. So this is a strategy where you can just short and scalp or you can do a few longer trades. But what we're gonna do today is we're gonna get into the app. And there will be this training, not this one in particular, but we will be back on to another call with Mr. Stephen Hooley where we do the training. So you're in a position where you're getting it before the rest of the company. Now, where do we begin? The web analyzer. So we have guests on the call, we have individuals, and I want everyone to be in a position where you are going to profit, where you completely understand this. So what we're gonna do is I'm gonna walk you through the web analyzer and I'm gonna walk you through exactly what you have to do. So first and foremost, this is the time frames. So every candle represents a time frame. Every candle represents a time frame. So with these time frames, you have your 5 minutes, you have your 15-minute, your hour, your 4-hour, and your daily. These are the time frames that each candle will represent based on the chart that you want to be on. These are the calls. You see it's flashing. We just had a call 8 minutes ago. Before that, we had one 33 minutes ago, and so on and so on. So we have more than one 33 minutes ago, and then 38 minutes ago. So what you see with these calls from the time past is that they are consistently coming out. These calls come out throughout the day based on the movement in the market. So based on what's going on in the market is how the calls come out. Now, as you can see, they will either be green or they will be red. If they are green, you see it says a potential buy, but the color also helps your eye just identify that it's a potential buy. If it's red, it says potential sell. So what that does is it helps your eye identify that it's a sell. So it just, the colors help draw it in, but it also lets you know exactly what it is. Then we have the time frame that I want to be on. So I can click and I can select what time frame I want to operate on. So I'm going to go ahead and I'm going to uncheck, because tonight we're going to focus on the 15-minute chart. You can get 10 pips on a 15-minute chart. So I'm going to focus on that. If you notice, when I unclicked everything, the only thing I have clicked is 15-minute chart. The only calls that I receive are 15 minutes. So I have a potential sell on Euro AUD on the 15-minute chart. Now, I'm going to show you how you select your strategy. First, I'm going to come to the bottom of the web analyzer. If you notice, there's a lot of information on here, but time frame, this is where your calls are, the power trades with little analysis that we discussed. Across the bottom, I can switch to Forex. I can trade cryptocurrency. I can trade indices. I can also switch to metals. So you have the option to trade what it is that you like. Tonight we're going to focus on Forex and we're going to focus on the 15-minute chart. Next to that, I have my strategy, okay? You want to click here. You want to pick a strategy template that fits your trading style. But what we're going to do is we're going to select the BYOB cash out. So I actually have to change my share. 1 second. So this is what comes up. When this comes up, you have to first select what you want, the strategy you want, which are all, they match and they look like what I just showed you on that front page. So we're gonna select BYOB cash out, okay, BYOB cash out. Now we wanna save for mobile and desktop. So this is for Safari desktop. I'm on a Mac, so I have to click this. If you're operating on your cell phone, because you could trade off of anything. You could be on your cell phone, you could be on anything, and what you want to do is you want to save it. Now, then this is the main setting. So this is just something you can't get around. Like you have a Safari or you're on your desktop, you have to click that. And so you have to also, that doesn't save it permanently, that saves it for the settings. Then you have to come save settings and reload. So when you save the settings and you reload, you now end up, hold on, it took it away. You now end up with the settings that we're looking for. So now these are the settings that we're actually looking for. 1 second. It froze on me, so hold on a second. Okay, here we go. These are the settings that we're looking for. I want my BYOB cash out, so I want to make sure I'm on the right strategy. And if you notice, now I know what session I'm in. So we're in the Asian Sydney session. So you notice that the London session and the New York session, those markets are closed. This lets you know exactly what session that you're in. Also, I'm coming back to my call price, my calls. I want to make sure that we talked about that we're going to focus on the 15-minute chart tonight. So I want to make sure that the only thing checked is 15 minutes. Now, when I verify my settings, so when I verify my calls, if I'm looking at anything on here, I have a potential sell on Euro AUD on a 15-minute chart that gives you a call price. It's going to tell you the strategy. You see it says BYOB cash out. So it's going to give you the strategy that you are selecting. It's going to tell you the time that it was called on the UTC and the local time. So UTC time you need because that's what's across the bottom. But the local time is just letting me know what time I'm dealing with, what time frame, so I can relate it. So I know right now it's about 9:15. However, this was called at 8:30. So that lets me know before I start doing any analysis, what do I want to go into this, how long ago it was called, because we typically operate on the time zone that we're in. And it also says this is the time that has actually passed since this trade was called. So I want to come across the top. This is where your currency pair will be. So I'm going to just click this one so we kind of see. This is where your currency pair is. So it actually changed to Euro AUD. It updated. I also want to make sure that I'm on the right time frame. We're operating on a 15-minute chart. However, daily came up. Daily came up. So what you want to do is you want to make sure that I'm on the right one. So I'm going to click to the side of it and I want to select the 15-minute chart because I always want to make sure I'm operating on the right chart. These are the candles, the Heikin Ashi candles. They're already formatted in. So what we're doing is, all we've done so far is verify. We made sure that we're on the right strategy. We picked a strategy that fits our personality, make sure this is what we want to trade. We know that we're on the Forex alerts. We made sure that my time frame, I'm working on a 15-minute chart. That's what I want to focus on. I verified the currency pair, and I verified the minutes that I'm on. So up until this point, do I have any questions? Any questions or any comments? Okay. If you have any questions or any comments, feel free, make sure you ask the questions as we go through this. But now we're going to tell you what the indicators are and why we use these indicators. So we're using Heikin Ashi candles. The Heikin Ashi candles, they focus on the trend. These candles focus on the trend. If you notice, if I was to switch this to the traditional candles, you notice all the movement. There's a lot of movement. The candles tell a story. It's important to understand the candles because each candle tells a story. However, I do want to point out when you're using the candles for understanding and identifying market movement, you want to make sure you're on an hour time frame and above for market movement. But even still, in the 15-minute chart and a 1 minute, 5 minute, whatever you're on, the 30-minute, they still tell a story. And as we begin to grow into market structure and understanding market movement, we will definitely, I will talk to you about how that relates into that. But right now, I just wanted to show you the difference of the candles. So these candles tell a story. The green is a buy, the red is a sell. So with that, this is a 15 minutes. So what we know is the buyers were in control in the green and the sellers were in control in the red. Now this is important. Even though we're using Heikin Ashi candles, this is important to understand because when I'm trading, the Heikin Ashi candles, look right here. Okay, I want to highlight something because this is so important to understand. Okay, when I'm trading this, okay, you look at this and what you see is you see sell, 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 buy, sell, right? You see the same thing over here, buy, 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 but then I have a nice, this one is probably better because it has a nice, it has a nice pull on it. It has a very nice pull on it. So as far as this red, it has a strong down in the red and the green, then back to the sell, then back to the green, which is a buy. So it has a strong, and I want to change the color to make it see-through. But that's what it is. So let me change the candles for you. And I'm going to tell you why that's important. So back to the Heikin Ashi candles. If you look at these candles now, well, this one, we wouldn't have been in this trade because all the wicks on the bottom. But on this side, right where I had this initially, on this side, what I see is just straight red candles, just downtrend of red candles. But also over here, downtrend of red candles. But if I go back to the regular candles, you see that the buyers had some play in that. The reason I'm pointing that out is because when you start trading, you will see it retracing. You will see your profit going in a profit and it pulling back and going in a profit and it pulling back. But when you look at the chart, you're seeing red candles. You're seeing sell. All I'm seeing is sell. And you wonder why your money is moving back and forth. Because the market these candles focus on the trend. It's important to understand that they focus on the trend. So yes, there's still activity in here, but what these candles do is they're taking the high and the lows, the open and the close, and they're giving you the focus of that trend. So you're not seeing all the activity, but yet when you're trading, you will see activity fluctuating in your profit. So it will go up, it will pull back a little bit, it will go up, it will pull back, and it's going to take profit. So don't get anxious and jump out of a trade, or don't get anxious and feel like you're doing something wrong. Just when you see these candles, just remember, as long as they have for a sale For a sell, as long as it has a flat top, and for a buy, it has a flat bottom. So that means that it's being pushed up. And for a sell, it has a flat top, which means that it's going in a downward trend. So when that top is flat on a sell, that means I have a strong sell. When a bottom is flat for a buy, that means I have a strong buy. So focus on what you see on the charts, and don't look at your trade and what you're doing and get anxious or antsy, because I want you to understand why. And that's just like what I explained in the beginning. Why do we have the call immediately following this? Because you want to learn how to trade, and you also want to know why you're doing what you're doing. So these candles focus on the trend. Now, the next thing that we're using is the PSAR, parabolic stop and reverse. What is a parabolic stop and reverse? This is the ultimate support and resistance. That's what it is. So what this strategy is doing is focusing on trends. It's focusing on movement. So we already know I either have a strong sell or a strong buy. Now with the PSARs, which are dots, I know that I have, if the dots are on the top, that is resistance. If they're on the bottom, that is support. In anything you're doing as far as being educated as you're learning, you'll begin to learn about support and resistance. You'll begin to learn how to draw your support and resistance lines. So as you begin to understand and draw your support and resistance lines, then what happens, you're not doing that on this strategy, but that's why the PSAR is so important. They're not support and resistance lines, but they show support and resistance. So if I have a sell, I have a sell, and I have my dots, my PSAR. So I have flat tops, but I don't have any dots. Then I know my trend that's just a pullback. My trend is not focusing in that direction, so I really don't want to take that trade. Also, right here, I have my dots on the top, my flat tops, my PSAR on the top. So I want to focus. That's what you want to see. Then we have the stochastic at the bottom. What does the stochastic show me? This shows me momentum, the momentum of the market. So everything that we're focusing on is focusing on what the market is doing, and we want it to be doing it in a strong direction. So with the stochastic, I want my blue line, if I'm going for a sell, I want my blue line to cross over the red, okay? The blue line to cross over the red and go in a downward trend. That's what I want with my stochastic. If it's above 80, that means the market is overbought. So it's got to turn around. If it's below 20, it's oversold. So it's got to turn around. And so when the blue line crosses over the red in an upward trend, guess what? I'm headed in the right direction. The blue line crosses down in a downward trend, I'm headed in a sell. I'm headed in the right direction. Now, how does all this play together? If you notice, right, this happened to be moving down in a sell, but I didn't have any PSARs, but I still have my stochastic. That's only 2 out of the 3 indicators. Now, I want to share something with you. Yes, it caught pips. It does not always catch pips. So I want you to focus on the rules. You do not have to take every trade. I want you to focus on the rules. So if you do anything outside of this, I'm showed you this because yes, it's a possibility that you will win that trade, but we want higher accuracy. We want to make sure that we're in a position to where our accuracy is greater. So anything outside of that, you're lessening your chances of an accurate trade. You're decreasing your percentage of accuracy. So yes, some of them will work, some of them might not work. But with this strategy, BYOB cash out, We want you to cash out. We want you to be in a higher probability of winning the trade. So that's why these 3 rules are important to follow, okay? So what are the rules again? I want my Heikin Ashi candles to be in a sell with a flat top or be in a buy with a flat bottom. I want my PSAR, my parabolic stop and reverse, or just think about the dots. If I'm going for a sell, I want...
wait a minute, wait. I didn't know I had to do all that.
Okay, we don't have a question. So I want my PSARs on the top, so I want a flat top. I want my PSAR on the top, but if you notice, this is not around the 80. It's close, but it's not around the 80. You want everything to match up, and you want all 3. If you want a higher accuracy, now, individuals that I've talked to that have followed these rules to the T, we're well into the high 90s for accuracy. Well into the high 90s. With the rules, everyone that I took today ended in profit with all 3 rules. So yes, as you can see that, for example, on this one, there only 2 of the 3 rules were there. However, it ended in profit, but it decreases my accuracy because I can also go back and show you trades that did not happen. Trades where it did not match up and it did not line up. So you want to be at high accuracy, get your 10 pips, and get out of the market. So, do I have any questions up until right now? Questions, comments?
Tasha, can you go over the rules one more time, please, real quick?
Yes, who's speaking?
This is Sharon.
Okay, yes, most definitely. So, I just pulled up another currency pair to do just that, okay? As I'm looking at this, now I'm gonna pull them from the calls, but I just wanted to go through the candles and the basic rules before I applied it to a call that came out of the trade. So, okay, here we go. So, when I have the first rule is, let me start from the very, very beginning. I want to make sure that I select my strategy. So when I come onto the web analyzer, I want to select my strategy. So I click the strategy down at the bottom. I select my strategy. Then you're looking at the session. The session is important because yes, it calls currency pairs outside of it calls currency pairs like USD. The market is closed right now. However, if I see one that says, you know, if I see, sometimes you do. So just for example, GBP USD, right? Both of those markets are closed right now, but they still move. So if you decide to trade one of those that in the market's closed, understand that that trade is going to move slower. So if you see something where we know AUD, the market is open right now, understand that, you know, then that's the trade we're looking at. So yes, you can trade whatever they call, but you just want to understand that the market might move faster, it might move slower. So that works with your patience. So BYOB cash out. I'm focusing on the 15-minute chart right now. That's what I'm focused on. So I've unselected everything that's in here. Now, you want to understand these three things before you start analyzing any currency pair. You want to understand this. For a buy, these are Heikin Ashi candles. For a buy, I want a flat bottom. For a sell, I want a flat top of the candle. So basically, if you just think about it, it's like my hands might be pushing the candle up. So I need it to be flat if it's pushing it up. When I start seeing wicks, like this is a wick coming out the bottom, I was in a nice strong buy. I started seeing wicks. Guess what? For that wick, I know the trend is actually beginning to turn. So it gave us some warnings up here, but this is actually beginning to turn. For a sale, the tops are flat as they begin to move down. Now, PSAR, the dots. For a buy, I want them underneath. For a sale, I want them above. So you can see this shows support and resistance. So the candles indicate the strength of the trend. So for example, if I have longer candles, do I have some more here? But okay, but when they start, you see the candles are pretty much, they close out below the other candle, they close out below, but then you see they start closing out around the same, or they actually get shorter. That's something important to pay attention to, because I know that that trend is coming to an end. I have my PSAR across the top, that goes for a sell. I have my PSAR across the bottom, that goes for a buy. If I have if the candles are small, it's not strong. So flat top, longer candles, the stronger it is, right? When it starts changing, then you know that trend is coming to a change. For my stochastic, over 80 is a stronger sell. The market's overbought. 20 and below is oversold. That'll give me a stronger buy. The blue line, we want the blue line to cross over the red line in a sell position. For a buy, I want the blue line to cross over the red in a buy position. So I want all three of those rules to match up. Understand, if you see something and it does, all three rules are not matched up, you will see some trades work and you will see some that don't work. But when you see that, I'm telling you this because I want you to understand that we're giving you the three rules to increase your accuracy, which ultimately can increase your profit based on how you're trading. So we want to make sure you have a higher accuracy, you're more comfortable trading. Because, for example, if I take a trade and I saw it on another one, but right here, if you see how this got caught, yes, it did end up in some pips, but my stochastic is in the middle. I would not have taken that trade. You don't take that trade because who knows, it was going up and the market could have just turned around and kept going up. So what we want is higher accuracy. And how do we do that? By following all three rules. And that's what you do. So you want the candles to be you want the candles to be correct, you want the dots, and you want the stochastic. All three rules. And that's how all my trades got won today. You know, I've gotten feedback from a few other individuals where following the rules, they were accurate on their trades as well. So does that answer your question? And do we have any more questions before I pull some trades?
I actually have a question. This is D.
Yes, ma'am.
When we're calculating the pips, after we have all the rules and we've identified the call, and I would be using, say for instance, we're looking at the Euro AUD right now, and it has that 1.59508. So if that was the buy, I am going to be adding to that number to see my pips?
Correct.
Okay, that's what I was trying to figure out, to make sure I was doing it right. So if it was the sell, which was the one underneath, I would be subtracting, but I would be able to see that in this right side, this right column?
Right here, correct.
Okay, okay.
That is correct. So, for example, let me just go ahead and analyze this one. since this is the one that you have a question on, we can just go ahead and analyze it. So this you are on Euro AUD, correct?
Correct.
So it's called 5 minutes ago. 5 minutes ago. And I'm gonna draw a horizontal line because I want everybody to actually see what it is that you're looking for. So my call price is 1.59508. That's when this was called. So the call price is actually gonna be the pip. Like what she was just mentioning and asking about are the pips, which are on the side. So 1.59508. So I happen to get it on there, but if I don't, while the line is still highlighted, I can come to the little wheel on the chart, click my coordinates, 1.59508, and you can type that in there for accuracy. So this is actually a buy. They're calling a buy. What you see right now is the trade's not ready. So it's not ready yet. But what we're looking for is we see that my stochastic is already down and it's beginning to turn. So this is a good one to look at because I can see how do my rules play into this. My stochastic is beginning to turn. It has not crossed over yet though, but it's beginning to turn. So my candles, they're still showing me a downtrend. Right? They're still in a downtrend and my PSAR is still flipped to the top. So this is where patience is important. This is where this is important because just because they call the trade does not mean it's ready at that moment. There is some patience because we need the trade to be ready. So these candles are every 15 minutes. So you can write down that currency pair and know that you need to check it again in another 15 minutes. Or, and as you can see, this one changed because an hour and 8 minutes ago, you see how that's why I said this is a good one, because you see how it fluctuates throughout the market. So if I want to, an hour and 8 minutes ago, right? They called this same currency pair for a sale. So this was at UTC time 0:30, right? So I want to go back on my UTC time and you see how it's lined up at the bottom. So that's why I still have the crosshair so you can actually see it. So it's lined up at the bottom. Now, where it's lined up, you have a sale. My candle is in a sale when they actually called it. My PSAR flipped to the top, but my stochastic is not all the way at the 80. It's not in the middle, but it's not all the way at the 80. So this is where you have to make judgment. 80, remember 80 is a stronger sale, increases your accuracy. It's close to the 80, but 80 is a stronger sale, increases your accuracy. Now, where was my call price? 1.59600. This is where my call price was. You do not have to wait until the call price to enter the trade, but you only want to go 10 pips from the call price. If I'm saying that where you can understand it. So when they called this trade, the candle began to form at the top. So the candle was formed and it always starts at the top. These candles always start directly at the top. So if everything was lined up, let's just say the stochastic was up higher. If everything was lined up, you could have entered a trade. So we're only doing 10 pips. So I would already be 3 pips in profit before that call price. You do not have to wait until that call price to enter the trade, but I don't want to go. See, when I got to the next call price, it was only 12. I don't have to wait until the call price, but I only want to go 10 pips from the call price. So I don't want to go, I don't want to enter this trade later. I don't want to enter this trade. Let me do that so you can see it, have it much clearer. Make it a little bigger so you can see it. I don't want to enter this trade. I don't want to miss it and enter the trade down here because the 10 pips is being counted from the call price. We're doing 10 pips from the call price, but I don't have to wait until the call price to get into the trade. Does anybody have any questions on what I'm saying? No questions on what I'm saying. So if I go from the call price to the next one, you see how that's 9, but where did it go? It went down. So you could have got your 10 pips, but it's still pushing it. And that's why I tell you this is important. This is so important as well. Because yes, I got my 10 pips. However, it decreased my accuracy because you'll see some of them will go well over 10 pips. And that gives you some cushion. So that's what you want to do. You want to have that. So do I have any questions? Because we're going to analyze some more.
Yeah, Tasha, this is Stacy. Where it says stop loss and take profit on there, it doesn't actually tell you that. Unless
No, it does not.
Okay, so you just have to know based on where you want to go from a pip perspective.
Correct. Now I'm going to tell you what I do for my stop loss, right? Mm-hmm. My stop loss, and if this is risk and on your own, but I'm going to tell you what I do and I'm going to tell you why I do it. So for my stop loss, I always put my stop loss outside of my PSARs. Always. Because when you start trading and you start able to analyze the market, what you'll see is that from the support and resistance line, the market moves in between the support and the resistance lines. So if my PSAR is if that's ultimate support and resistance, I don't want a stop loss in between. I don't want to, because you're going to tap out of the trade. Mm-hmm. Because if you go back and you look at the traditional candles, you look at the regular candles, you see that there is movement. There is movement. But how do I increase my accuracy? Because what I do know is when I'm within this range, you see some of them are wider. That's why I say it's going to depend on you if you want to take that trade or if you want to do that, because it's your risk analysis, your personal risk analysis. So in between the trades, you see that this moves. But what I do know is if I'm in, like they had a strong, on this one, they had a strong downtrend. I mean, look at this drop. So if I would have been analyzing and I started seeing these wicks, right? So this was yesterday. Yeah, this was nice, actually. So when you start seeing these wicks, I was in an uptrend and I started seeing these wicks, I know the trade is turning. I know for a fact it's turning. So I know to get out of the trade. I know not to stay in the trade because it's time for me to get out of the trade. Now, so even if I don't have my 10 pips yet, I know it's time for me to get out of the trade because the trade is turning. And when this one turn, you have the candle, you had your PSAR, and I mean, it had a very significant drop. Come on, computer. Any questions while it's thinking?
Tasha, so when you do the BYOB cash out strategy, it automatically puts the PSAR and Stochastic in it, right, for you to look at?
Correct. So what's different from when we talked about this before is it's now loaded into the web analyzer. Gotcha. Previously, it wasn't loaded. So what we were having to do is go on another template and modify it to what we needed, right? And so every time we clicked on something, it had to be modified to the indicator that we use the BYOB cash out. So now, no matter which one I click anything.
Right.
Okay, it's free, but I can click any one of them and it's literally going to pull up what I'm looking for. It's going to have the Heikin Ashi candles, it's going to have the PSAR, and it's going to have the Stochastic. So it is definitely thinking. It's
Thank
not letting me move anything. So now, let's ask, while my computer is thinking, let's ask some questions. Any questions, comments? Let me answer your questions. And as you can see, you better let me do it. Like, for example, this one actually dropped. If you would have, look at that, that's 83 pips. So yes, this one yesterday, I know it was going one way or another, but that was 83 pips. So actually able to benefit from that. So that's why I say it's a 10 pip minimum. It's a 10 pip minimum when everything is lined up. But I wanna click on another one to show you, just to show you. Okay, here we go. So if you can see, I just changed it. And when I changed it, everything pulled up. So I have my Heikin Ashi candles, I have my SAR, and I have my Stochastic. Now, you can either go 10 pips and get out 10 pips, and that's it. While you're learning the strategy, before you start trying to take greater profit, my recommendation is do your 10 pips. Increase your accuracy, understand that I'm going 10 pips from the call price. So just as we just showed on another example, that I can enter, if my rules are there, I can enter before, but it's 10 pips from my call price. And then, but my stochastic, so I have everything lined up, but my stop loss is always outside of my SARs, and I just explained to you why that's where I put mine. Any question?
I don't have a question. This is Gerald. I just wanted to ask, particularly for our guests, for those of you who are, and for even our business partners, as you look at the validity of the tool. So, and as we've structured this, where you can literally gain 10 pips every 15 minutes or so, depending upon the chart and the candle. But here's the wonderful luxury about having this information in front of your hands. Depending upon what session you're focused on. As you can see, we're getting multiple calls on different currency pairs. And as we progress through the different sessions, you'll begin to see that the amount of calls are being made. So if you think about it from this perspective, knowing if you take 5, 10 calls, currency pairs, and you stick to the rules, step number 1, making sure your SAR is there. The Heikin Ashi candles are flat at the top or the bottom, depending upon a sell or a buy. Then it's stochastic. Folks, literally, this is literally like going to the ATM machine and just extracting money out of the market by simply following these rules. And that's one of the reasons why we called it the BYOB cash out, because it's there for you. I just want you to understand the simplicity of it. And if you're a veteran or you're a new person or you're a guest, once you go through the academy, that's where it all begins. And then this is one of the tools, and we have multiple tools that are designed to create and help you become profitable. But this is a good place to start for those of you who are getting started and those of you who are getting familiar with the simplicity. And we know if we make it simple, make it plain, then as you become more in tune with market structure and strategy, then you can always be in a position to increase the amount of pips that you take per trade. But folks, this is very simple for you to maximize and put you in a position to profit in the shortest time frame possible.
Exactly. And as you progress, so I have people on the call at different levels. So as you're learning it, focus on your 10 pips. But for those of you who are more comfortable and are already in profit, I pulled this up to show you something. So let's say in between the calls, there was on the 15-minute chart, there was an hour and 20 minutes. So it's a good hour in between the calls. So you can still trade. I sit down, you can still trade. So if you notice, my stochastic is at the bottom. Then I come up and I'm beginning to move into an uptrend. So this is the first candle we would have been actually looking at. So it had the flat top and the PSAR. So all my criteria, everything lined up, everything. So I came out of the sale, everything lined up. So while I'm waiting on a call price, because you know the rules, see what the web analyzer does is it scans the market, it pulls the algorithm, it does the heavy lifting for you. So we already know that we were working on this chart because I pulled this currency pair from out of one of the calls. I pulled it from here. So, but what I do know is that I can literally take this and I can watch this. And as long as everything is aligned, everything is lining up, I can, if I, it's each candle is 15 minutes. So I'm not saying sit in front of the computer, and watch it like that, but you can just continually check it. And if you would have rolled this up, and then when you notice that it's a possibility that it's going to change, but it did not, the candles turned back green. And then when I got to the top, I got my wick, it changed and it went into a downward trend. I mean, let's count pips. So I want to show you just how you can be in profit with this strategy as you learn the market. So we would have started at the candle where it called from. Let me pull this down. I want to be able to see it. So if I had a call from there, you talking about before I saw my wick, where it peaked, and then I would have saw my wick. So we probably would have got out, let's just say anywhere between 55 and 60 based on where you would have pulled out. Just on that uptrend right there. And then if I'd have turned around, and this is the flat candle where I would have got into this trade going in a downward trend, before I started seeing wicks in the turn, you're talking about almost another 30 pips based on where you would have got out of the trade at. So, I mean, this is phenomenal. You begin with following the rules one by one by one. Get your 10 pips, get comfortable, begin to understand it, get very comfortable, and then once you go from there, you're now in a position to where you can go 10 plus pips. So any questions, any comments before we actually transition this call? Any questions, any comments? Because it is just, we got about 2 minutes before we transition this call. I want everyone in profit. I want everyone in profit. I want results. I want to know that because we are literally, I'm getting messages from people. People are reaching out. They're just off of what was shared a week ago on that video, they're in profit. So I want to make sure that you all who are part of the BYOB family actually know and understand how to trade this. Because when you enroll, just as Mr. Rogers just stated, you go through the academy, you learn, you begin, you understand. But then you begin to, you enroll, you learn the tools. This is part of the learning the strategies. This is part of learning the tools. And then it puts you in a position of profit. We want to put you in a position of profit. And what this strategy does is it collapses those time frames. It collapses that. So whether you're new and beginning, all I have to do, I just enrolled, all I have to do is follow step 1, step 2, step 3, and I'm in a position of profit. And then if I've been trading for a while, I can still follow step 1, step 2, step 3, and I can get 10 pips plus just from utilizing this tool in this web analyzer.